All right, hey guys, and welcome to our conversation today with the old bull and the young bull. I'm excited to spend some time with my mentor and great personal friend, the founder of Smart Group Houston, over 55 years in the industry, Ron Schutz. Ron, good morning.
Good morning to you.
The idea behind this was really two-pronged. I was sitting there thinking, what would be a great way to not only tell the story of our organization, but bring some education to professionals out there, but also to, I'm really placing some emphasis on legacy, right? As far as the direction that I'm trying to go with my career, the people that I want to work with, and the people that I want to spend time trying to serve.
Mm-hmm.
And I think legacy is it's a word that's thrown around, but it really is a word that if you live your life with legacy in mind, you're going to do great things. And I think you have established a phenomenal legacy. I've been had the pleasure of working with you for 5 years, watching you, being around you, seeing the impact that you've had on your clients. So I also figured it would be fantastic to be able to have something that I could cherish, right, and look back on 10 years from now and remember the time. I spent a few interviews with Ron, just having you impart wisdom on me and the rest of the folks that are going to tune into this. So that being said, we'll break this up into a couple conversations so people can tune in 20, 25 minutes so they can chime in and hear what we have to say. So I'll go ahead and fire off and start running some questions at you. Ron, we're at 55 years. That's a little bit of a while doing this. Talk to me a little bit about what you've witnessed in regards to the changes or the shift that's taken place in our space, the financial planning arena.
Well, it originally was pure product sales, needs-based type of an approach. And I realized pretty quickly that just didn't do the full job. And that people's lives change no matter how you look on a spreadsheet. That spreadsheet is old before it even gets printed because reality tends to hit us in the face. So I gravitated towards comprehensive planning long before it was in style. And I realized that the biggest component was taxes. And most people don't think about taxes. They worry about the tax for this year. That's it. One of the things that I realized, we're going to look at taxes over your lifetime, and you talk about legacy. So when I'm gone, does Gail have a big tax bill? Or when Gail and I are gone from here, do our children and our grandchildren have a big tax bill? Because Uncle Sam is out there, hands out, always looking to take it away from us. We don't deserve what we get. We haven't earned it, et cetera, et cetera.
Right. Yeah, it's interesting, but one of the things that really stuck out to me from my transition, from my time at this and a company before, was what you just described. I didn't know anything about financial advising when I just got into the industry, and I learned very quickly that you have insurance-based guys and you have asset-based guys, I didn't know it, but I had gone to work in an insurance firm and learned. That's how I became aware of what we did.
Mm-hmm.
At our firm, one of the things I've been proud of is our ability to do it all, really have a wide variety and a diverse group of offerings. But the thing that I really like what you said the most was this kind of tax component, because any money lost in the marketplace, any money lost through taxation or lost opportunity cost or unintentionally, we call it finding lost money. That's something that you taught me years ago.
Yep.
If I can improve your position from a total wealth perspective without increasing your risk, I've already made an impact. And as a young advisor, I always got nervous when people ask me, well, what kind of returns can you get? Because I feel like that's such a commoditized way to drive our business. But the reality is, what can I keep you from losing? What can I actually help you serve or grow in your wealth without having to enhance your risk? Because when you start shooting for high returns, you better be ready for the downside, which is also the big swings, which we've obviously seen in the last few months, really over this last year. Now, let's talk a little bit about the economy right now. So, I've lived I've been investing money for now 20 years. 2008 was the last time I can remember a bad, dark season. Other than that, it's been just, just climbing hills, man, since day one. And we get spoiled. And I think especially in the last 3 or 4 years, we got spoiled. Cheap money, money just growing off trees, literally. And then this market that just seemed to bounce no matter what and always heading up. So That's shifted quite a bit lately.
Yeah.
Talk to me a little bit about our current economy, and maybe if you think if there's any periods of time in which it reminds you of.
Well, there's an old statement: luxury once enjoyed becomes a necessity.
Yes.
And that's including luxury in investments. When investments are running great, the tide is coming in, people think it's going to continue forever. But just like the tide comes out or goes out. And it's a lot of contributing factors. They don't put a sign up and say, or blow a whistle and say, okay, now the market's going to decline. It's really built on fear and confidence, is what it is. Because when you invest in, and I'm going to talk about the stock market generally, I'm not recommending any specific item or allocation, but it's easier, I think, to relate to that. When you buy a stock, you're buying future earnings. That's really what you're buying, whether it's in the form of dividends or hopefully market appreciation. If the company earns more money, it should increase in value. What we've had, and this is really like we had in 1994, is you've had this huge increase in rates by the Fed to stop inflation, and that makes the value of those future earnings worth less. Now, sadly, as quite often occurs, it's government that created the inflation problem. Government threw so much money at the economy, it couldn't absorb it fast enough. It'd be like going to an ice cream parlor and they say you can have as much as you want until you've filled your belly up, and you're going to feel awfully bloated when you walk out of there.
Right.
Same idea. So it's kind of sad, but that's what happens. It's the ebb and flow that occurs. There's also a real lack of confidence by the consumer right now in our leadership. And that, I'm not trying to condemn one party over another when I make those statements. But it's just a sad. Bush 41 came out of the war in the Gulf. They thought he was unbeatable, but he got beat by Clinton in '92 because the economy started to get a little squishy and people believed it was going to go bad, and they said, let's try the other guy.
Right.
That's what's happening right now, and it ebb and flows all the time.
Right. Not your first rodeo, and for those of us that are going to be around for the next 55 years, it won't be our first rodeo either, right?
Correct. You'll look back and yet most adult investors recognize that if I have money in the market, it's going to go up and down. I don't like it when it goes down, but it's part of it. Unfortunately, this past year, 22, we had a situation where as interest rates rose, the price of bonds deteriorated, and it impacted also stocks. So you had both major assets decline. The only thing that worked well was a commodity, and that's called energy. Pretty much.
Yeah, of all the sectors, it seemed to be the only one that shined at all last year.
Yeah.
But when you're now, we won't get into that right now because but I think that elicits some conversation later on in the discussion about the opportunities that exist in this environment. But let's talk about specifically the economy in and of itself, some of the red flags or the things that might be concerning. I know a lot of people are concerned, and you keep hearing it in the news right now. We know our deficit, the government itself is actually at a standstill right now, and you got people on both sides of the fence who are having a hard time agreeing what needs to happen. Again, I think you said it earlier, without giving any type of recommendations or anything of that nature, let's focus on what are your thoughts on the deficit, the existence of our Social Security, and what that looks like, and Medicare.
Well, that's a big topic covering lots.
Well, I guess the consolidated version, right? Because
I'll try to give you the micro version. And we can break it into 3 separate parts.
Right.
Let's talk about the deficit for just a moment.
Okay.
I remember that when we passed $1 trillion, we're now at 31 trillion. That's 18 zeros and running. It's kind of scary. And it's really taxes that they haven't collected yet, because that's how the government runs. Their revenue is on taxes.
Right.
So I'm going to use a household family of about $200,000. So 2 wage earners in a home earning about $200,000. They've maxed out all their credit cards, and they're over $300,000 in debt on their credit cards. They can't even pay the interest on the credit cards. They're struggling to pay the interest because of so many demands on spending money.
Right.
And one of the big ones is Social Security. Social Security was originally formed 90 years ago. It was formed to say, we've got to take care of older people. Life expectancy for the average person was 63 rather, and they put the benefit to start at 65. If we adjusted for life expectancy improvements that medicine has occurred, so life expectancies today are 77, 78. They've come down a little bit because of COVID, which means that Social Security shouldn't start till age 80.
Wow.
80.
Wow.
If we were running off the same rules. But the problem is that politicians don't suffer the consequence, because by the time all that stuff hits, they're long gone.
Right.
So Johnson put in the Great Society, which included Medicare, and we're going to solve poverty. We still have similar rates of poverty. So even though the government spent trillions of dollars, 60 years later, we still have poverty in our country. And unfortunately, that has created an additional problem, because as you get older, you require more demands of the medical facilities. In fact, Medicare, according to the information I have, says that they spend 25% of the cost on older people in the last year of their life. Think about that.
Wow.
The last year trying to sustain life. Because we're all gonna be finished here someday. So it's, instead of letting private industry deal with it and maybe have the government said, this is the parameters you've got to operate in, and we're sitting at a table. They came in and said, we're gonna set all the rules and do everything. And government by its very nature tends to be inefficient, bureaucratic, waste money, a lot of fraud, always. You can go back in history, Rome, Greece, Egypt.
Right.
I mean, I said this is a big topic.
I'm watching The Chosen right now, and the Romans, they weren't operating above board.
Right.
So, yeah.
Yep.
So you mentioned it right there, and I think you said that the impact that all of these expenses have, because there's two ways to pay for it. You either produce more, right? You either produce so much revenue as a country that you could supplant your current existing spending habits. Currently, our balance sheet's upside down, and it seems to be operating upside down perpetually. And so I don't see how that's going to happen, right? We had some of the best GDP years you could imagine in the last 2 years, and it still didn't keep up with how much we spent.
Yeah.
So there's another way, right, to collect revenues, and that's through the tax man. And so a lot of times when I meet people, they are spending a majority. When I meet people, the first thing that they're doing is their 401k, and they're contributing, and oftentimes they're looking for ways to defer taxes out of today's environment and kick them down the road into the future, right? And so, and deferred is not removing them, although I think a lot of them in their brain think they're not paying it.
Correct.
I think they lose sight of the fact that there's a tax bill waiting out there.
Right.
I remember on Friday I was showing someone their plan, and at the end of the plan they had 1.4 million in tax-free assets and 2.5 million in tax-deferred assets, and they said, "Oh yeah, well that tax-deferred really did a great job." I said, "It did, but at your income you've got about 35% of that's got to go away. So let's wipe off 35% off the top." And so it's easy to see and have that happen. What do you think is going to happen in the future of our taxes?
Oh, I don't think there's any doubt that it'll go up. What they've been doing for a long time is removing deductions, and then they play around with the rates, but the effective dollars that the government collects are higher.
Right.
And you've got a lot of whiz kids working for the government that are trying to figure that. In 22, the government collected more money than they ever collected before, ever. And the rich are always going to pay the taxes. It's just the way it is in this country. And to be rich in this country, to be in the top 10% today, if you have a household income of around 170,000, so if you're working on your taxes and you look down the bottom of your first page of your tax return and you're over 170,000, that means you made more than 90% of 9 other people in the that you run into.
Yeah, it's
And that's
crazy to
who,
think about.
that's where the government targets their sources. It's go to the rich, they have the money, tax the rich.
Right. Yeah, we always say it's a bullseye on their back, right? I know
Oh
our
yeah.
clients, and when I tell people I work with the top 10% of America that think I'm being bougie or pretentious, and the reality is when I use the top 10%, when we're talking about a couple hundred grand. Again, that's good income and that's great living, but if you were to look at the majority of the folks living in the suburbs, Katie, a lot of these places, I mean, $200,000 is an engineer and a teacher.
Yep.
And they're the ones who essentially are paying. If we collect a tax dollar, right, and we collect $10, 70% of those $10 come directly from people making $200,000 in their household and above. So 7 out of 10 of those dollars collected. So you're spot on. I think taxes are going to be a definite freight train that we have to look out for.
And that when you talked about postponing my taxes in my 401k plan, it's really a timing of tax question. So if you're sitting there and getting child tax credits against your income, et cetera, maybe if your company allows a Roth option, take the Roth option now. When your kids are gone and you're just the two of you, maybe you should go back to a traditional deferral of money. And again, this is not.
No, it's not recommending.
It's just you
Right.
got to think in those terms.
Right.
You don't go into an HOV lane on your finances. If you do, you're going to get clobbered.
Yep, absolutely.
Yeah.
And I think the key component is measuring the tax, right? And so when you look at taxes, we say you pay taxes 4 ways or can pay: when you make the money, when you grow or grow and put the money to work, depending on where it's at. When you decide to use the money, you can pay for them, and depending on your success, you can even pay for them at death. So, I think whenever you're looking at a dollar of income, you have to measure that dollar from today until they're in the grave and see of its life cycle what it's going to look like. And I think that's probably the most rewarding part of our career is being able to go in and take someone's exact such scenario and not really do anything other than perhaps move it from one pocket to another, but in a more efficient manner, and watch how that dollar goes to work. I think efficiency is, it's like you swim, I work out, I train. I'm always looking for efficiency. How do you get the most done in the least amount of time?
And that's a good analogy. Friday when I swim Mondays and Fridays. Friday when I swam, I had terrible time. I just couldn't get into the rhythm. I had a lot of stuff against me. This morning when I swam, I blew through, got one of my best times. And it's the same thing. Sometimes you're going to have these periods where you can really make huge strides forward, and sometimes it's going to be really difficult. And chasing yields will get you in trouble, by the way.
Oh yeah. Every day. So let's shift here because I think the first part of this conversation we're going to talk more about general economy, general things that you're seeing. I mean, I would be remiss not to spend time with you on it because you've seen so much. And then we'll shift and pivot a little bit more into individuals and what maybe they're facing, specifically to our current economy and what we've observed with this war with Russia, or not with Russia, but with Russia and Ukraine over the last couple of years. We've seen, I think, a drag on. I think you have a compounding effect. You had the first effect, which is we pumped all that money in the economy, and that caused inflation. Then you had essentially what's becoming a global war, right? Because of the global impact that it's had. So it's that one little pocket over there, but it's a massive impact across the entire globe when it comes to supply chain and what we're seeing. And now we're starting to see tensions boil. And so what are your thoughts on the relationships that we have between China, Iran, and Russia? And how do you see those having, where they were evolving and maybe which direction that they're headed?
Again, a big question.
Right.
China wants to be number one. They feel that they should supplant the United States. 2030 is what they're talking about. That's 7 years from now. China doesn't play fair. They deal from the bottom of the deck. And that's just part of their history and ethics. At one point, they were a major economy in the world, and they want to be that way again. It's also ruled from a very central controlled power, just like Iran, just like Russia. We're one of the bastions of hopefully freer enterprise and the ability to collaborate. The beauty in the United States is we encourage collaboration. People come together and try to put the best ideas out there. If they're successful, they win. Those three countries recognize that if they come together, there's a chance that they can knock us off. And that's really what's happening. So you have a proxy war really going on in Ukraine with Russia. And Russia's not looking so great on their, quote, military might. It's like somebody's all bulked up, but you know, when you get into the gym with them and watch them, they're pretty sluggish and their form isn't very good.
Right.
So that's Russia.
We have a saying in the gym. It's called "all show no go."
Okay.
Yeah, all show no go.
All right.
Yeah. So we're seeing that in Russia play out, right?
Right.
All show no go.
And then in Iran, you've got on top of just control, you also have the religious aspect that come into play. That is, it's alien to me personally. Yet I understand there are a large percentage of the population that go that way. But Muslim friends of mine are not like I understand they are in Iran.
Right.
So it's again a sad control. And you mentioned Rome earlier. Rome was corrupt. They ran out of money. They used to acquire lands and then tax the people heavily, and the whole thing collapsed. And I think we're going to see something similar to that at some point in the future. And I haven't even talked about the military and what
Right.
China's done on the military side versus our side, et cetera. It's just, again, a whole other topic.
Well, I think the translation, or not translation, but what I believe seems to be evident is the awakening between having seen this and witnessed this. I think it was a good swift kick to the gut of America that says we've got to start bringing work back to the U.S.
Mm-hmm.
For the longest time, and again, is in the 90s, early 2000s. I think people raved and you hired consultants to come in and figure out how to help you grow your business, and everybody said, oh, we got to ship it out. So that back when you were doing this, you probably worked with tons of guys who prided themselves on getting everything off of American soil and getting made overseas, and they built an entire infrastructure. We built an entire infrastructure designed around getting things from China
And
right?
Japan.
and Japan,
Yeah.
and and all these other countries. And while there's a place for global manufacturing and global trade, and we're always going to need it, I think the observation that I gleaned from the pandemic, if there's not one major thing that stood out to me, was the significant need for us to bring a lot of this work back to our country, because we saw it happen when we were hamstrung in our ability to react or do the things that we needed to do, and our ability to bring costs down to our consumers due to the simple fact that we were beholden to somebody else for the goods. And so you're actually seeing a lot of that happen in our port region right now. I had one of my peers and mentors, Chad Burke, on a show on Friday, and they were talking about several billions of dollars of projects that are focused and centered in on trying to build and develop manufacturing that they were essentially Houston, our region, will become a hub for creation and development, and then getting it out to the rest of the world, which I think is going to be huge. What do you think the over the next 24 months? And again, we'll pivot and shift gears after this question and go to more on an individual basis. But we're seeing, because of all this inflation, we've seen these hikes in interest rates. We're seeing it impact the economy. We're seeing a crazy, turbulent stock market. If you had to encapsulate your overall thoughts over the next 24 months, right? And again, this isn't a recommendation, right? You're not telling people what to go do with their money. We're simply saying your opinion, right? My opinion is the next 24 months, here's what we can expect from the economy, from the stock market, from interest rates, inflation. I would just love to get Ron's 2 cents.
Well, again, you've thrown a lot out there.
The one,
I'm going to
like I said, we're going to keep it.
I'm encouraged. We survived Jimmy Carter. I personally believe, this is my personal opinion, that our current president has made Jimmy Carter look pretty good.
Okay.
Out of that, we got Ronald Reagan. And again, you can argue whether he was great or not great or any of that kind of stuff, but he set in motion, starting about 1984, 85, an economy that flowed until basically the bubble that occurred
The
around
financial
2000,
crisis.
2001. And I think we're going to see that same, again, ebb and flow that occurs. The challenge that we have as we bring production here is how many people are willing to work for $15 an hour? That's the problem. That's why you see robots coming and automation and all that kind of stuff that comes along. Therefore, I would say you got to look at a country like India, which speaks English, also has tremendous communication. That's a real emerging force that I think could replace a lot of China. They're going to surpass China in population if they haven't already done so. And Africa. Again, you've got some pockets in Africa that are prosperous, but Africa is basically undeveloped. But also as they come into the global economy, they're coming in with 2023 technology.
Right.
So I think those are two areas that may help collaborate with logistics, which is basically shipping, and the production. Production in our country is going to probably be of a higher level of skills than you might think of in the 30s when Social Security was put in, as an example, or even in the 50s. You know, I grew up in the 50s, and it was a totally different time than we have right now.
Fantastic. All right, Ron, let's shift gears. I'm going to take the second half of the show or this interview, and we're going to talk a little bit more around people as specifically.
Okay.
So we'll
Can I mention one more thing?
Absolutely.
Okay. I wanted to hold on. I held on to this because it caught me. You know, most people say real estate is a great investment. It never loses money.
Mm-hmm.
You know, they're not making any more, et cetera, et cetera. Well, events can impact real estate. So this is something that appeared in the 22nd of February Wall Street Journal section A2. It was put out by the NRA, a National Association of Realtors, and it talked about median house sales. And that's the number of sales below this number and the number of sales above are equal. That's what median is, not average. In June of 2022, which isn't that long ago, as we sit here doing this today, the median price of houses was $413,800.
Okay.
So almost $414,000. In January of 23, it was down to $359,000.
Wow.
So that's a pretty good drop. Not only that, and they used Austin, a suburb of Austin, as an example. The house was for sale for $375,000, so it was just a little above the median price that was quoted for January. And the offer accepted was 3.8% below the asking price, because the buyer now has a little more influence.
Right.
You know, back when rates were at 3%, the seller was able to command more, and the prices were usually, or not usually, but often, if it was a good house, above asking. Today, when it's in the sevens, more than doubling again, half again, the buyer has more control on what they're willing to pay.
Absolutely.
Which really comes down to how much monthly. It'd be an interesting number, which maybe we can have on the screen. It shows $1,000 at 3% on a 30-year mortgage versus $1,000 on the 7.5%.
It's a huge shift.
What it really, how big of a mortgage can I afford? So I wanted to point that out as it's not that real estate is bad. It'll help offset the impact of inflation if you hold it long enough.
Right.
It's back to time again. You need time to let things work out.
I think that's a great way for us to transition to personal planning, because on the personal side, because we have a lot of questions tailored around that and what we can expect from the economy as an